Thanks for joining us today. You've tuned into Business Daily and I'm Lee Ji-yoon. Before we get started, let's take a quick look at today's highlights. China's economy grew at its slowest pace since the global financial crisis in the third quarter. We sit down with an expert to dig deeper into those numbers from the world's second largest economy. Successful franchises are seeing their businesses flourish thanks to the idea of joint growth and coexistence with smaller operations. But before we get to those stories, we begin with Korea's producer prices, which tumbled to their lowest level in more than 5 years last month. The Bank of Korea says the producer price index, which gauges price changes before reaching the consumer, dropped 4.5% from a year ago to 100.47. The index, which has fallen for 14 consecutive months on year, is at its lowest since July 2010. The central bank attributed the fall in September to a big drop in prices of industrial goods thanks to weak global oil prices. The price index for manufactured goods fell more than 7% on year, while utilities slumped 9%. Looking ahead to next year, Korea's finance minister says 4.2% nominal growth is conservative and reachable in 2016. At a Parliamentary Strategy and Finance Committee meeting, Minister Choi Kyung-hwan was asked whether he thinks a downgrade on next year's growth outlook would be necessary. He answered the government's target for nominal growth was conservative compared to forecasts by international organizations like the OECD's 4.7% and the IMF's 5.8%. He added that tax revenue has so far been better than years before, which should help prevent a large-scale deficit next year. Just when things are starting to look up for the country's tourism industry, a latest forecast indicates that the sector still faces a grim outlook for this year due to the fallout of the MERS outbreak over the summer. Korea Culture and Tourism Institute predicts that the number of foreign tourists to the country this year will drop to around 12 to 13 million. Now, that's about a 5 to 10% plunge from last year's 14 million. It also falls short of an earlier government projection of 15 million visitors, which was made before the MERS outbreak. The institute forecasts the decline will pull down the country's tourism revenue by up to $1.6 billion. The number of Koreans visiting other countries, on the other hand, is projected to hit a record high this year. Roughly half of 21 conglomerates in Korea have decided to adopt the wage peak system across the board starting next year, in line with the government's push to reform the labor market. The Federation of Korean Industries said 11 major groups, including Samsung, LG, Lotte, and POSCO, have agreed to implement the wage peak system at all business arms. The remaining 10 conglomerates, including Hyundai Motor Group and SK, are continuing talks with their labor unions to roll out the system next year as well. The federation added that companies and workers need to come together to introduce the system that's aimed at producing more jobs for younger people. The wage peak system pushes back the retirement age of senior workers while putting them on a lower salary. Worries are growing over a rapid slowdown in the world's second largest economy, China. And its latest GDP figures showed that its economy grew 6.9% in the third quarter, the weakest rate since 2009. Take a look.
The week started off with China's GDP numbers released for the third quarter. They were rosier than expected, but slightly below this year's growth target of 7%. But by sector, some say China's economy has been a mixed bag. Industrial output in September cooled more than expected to 5.7% as growth in mining and the energy sector fell. But the services sector's third quarter growth came in at 8.6%, up from 8.4% in the first 9 months of this year, while retail sales of consumer goods quickened to 10.9%. Despite such figures, experts say more measures of monetary easing are necessary to sustain recovery in the property market and infrastructure investment. Considering China is the world's biggest consumer of commodities, All eyes are on whether the country will put out additional stimulus measures to step up its slowing economy.
And to tell us more about this, we're now joined by Professor Yang Jun-seok from the Catholic University of Korea in the studio with us today. So good to see you, Professor.
Happy to be here.
All right, so can we say that yesterday's GDP figures from China further confirmed our concerns about China's slowing economy?
Yes, well, 6.9%, it's not a bad number per se, but China has been targeting 7% growth this year. So the very fact that it fell behind the government projections, it seems to confirm that the Chinese growth is slowing down this year.
All right, then what are some notable changes that we saw in the third quarter growth trend?
Okay, well, the disturbing thing is their agricultural output and the manufacturing output fell, and the investment was about 0.5% lower than what everybody expected. It recorded 10.3%, where people have been expecting about 10.9%. So those are all bad news. And their exports are not doing as well as last year or the year before. On the other hand, there are some slight traces of news that's somewhat optimistic. First of all, services grew a lot more than expected. It was in the high 8% range.
8%
Yes.
range, okay.
And also, the retail sales have come up just slightly better than what they projected. So by itself, it wouldn't be bad news, but apparently a lot of that sales seems to be from the rural areas. So even though the urban areas, the manufacturing sector is slowing down, their consumption seems to have a seed of catching up. So that may signal some good news in the future. But overall, it wasn't very good news.
All right, but then the numbers were slightly above market expectations. So can we say that the Chinese government's efforts to get its economy back on track kind of worked, somewhat worked?
Well, most analysts do believe that the government's effort to prop up the economy did mitigate a lot of the negative effects. People were expecting 6.8%, but it came up 6.9%. So that's obviously good news. That's why we didn't have a lot of shock in the market yesterday. On the other hand, there's a lot of people who doesn't quite trust the Chinese statistics.
Yes.
So we don't know what's going on overall, but on the other hand, even though the Chinese may not present accurate statistics, they do present trends. And the trend seems to be that, okay, it is getting worse, but not as worse as everybody feared, especially with all the shocks we had in the second and third quarter in their stock market, real estate market, and the explosion in one of their industrial areas and so on.
All right, but then Korea, of course, for Korea, China is its biggest trading partner. So obviously all these numbers are going to have implications for the Korean economy as well. So what kind of impact are we talking about here, especially with Korea's GDP growth rate figures expected to come out this Friday?
Okay, well, the Korean figures, there's a very wide dispersion of guesses right now. So lower guesses are 0.5%. The higher guesses are up to about 1.1%. But as far as the effect from China is concerned, so far this year, Chinese exports to China from Korea has gone down by about 2.8%. So it's not good news that Chinese economy is slowing down. And the problem that China and Korea share is that there's not a lot of global demand. And for countries like Korea and China, we've always looked to exports as engines of growth. And because the export market is very bad right now, that leads to domestic recession. On the other hand, for both China and Korea, the optimistic side is that, as I mentioned before, for China, their consumption seems to be picking up, or at least not doing as bad as people thought. For Korea, we may not do so well in exports and intermediate parts that China uses for exports, but we may do relatively well in the things that Chinese use for domestic consumption.
Okay.
There's a chance that it won't be as bad as what everybody fears, but there will be a negative shock.
All right, but then I heard that there are already higher expectations for fourth quarter GDP growth figures.
The Chinese government official seems very optimistic that they will achieve their goal of 7% growth.
In the fourth quarter?
Yes. Well, overall for the year.
Overall for the year,
and they seem to be very confident about it. And that seems to imply that they will do whatever it takes to achieve the 7% growth. Like Korean government is trying to do everything it can to achieve 3% growth. On the other hand, there are some concerns that they will use, because they're in this deep recession for them, they will delay some market reforms that are needed. For example, because of the stock market crash that they had during the summer, they delayed some of the transparency measures, and then government interfered in the market that they promised that they won't interfere as before. So there's some concerns that this will serve as an excuse for China to delay reforming a lot of their financial sector, a lot of their transparency. They're also suffering from things like overinvestment in real estate, which is somewhat typical in a developing country, but still they have all these structural problems that they need to work out. And I think the slower growth is just a symptom, the outward manifestation of things that need to change. And there's always a problem. Do you go for the long-term solution or do you go for short-term fixes? And I think at least for this year, China is signaling that they'll go for short-term fixes to achieve their 7% growth.
All right, then on top of that, do you think we'll see additional stimulus measures from the Chinese government then?
I think so. I think this 6.9% signals that they're going to do everything they can to achieve 7% growth, even though they gave themselves a little bit of a wiggle room. They said that less than 7% growth is okay if they have job growth. So they may try to get out of it that way, but they've committed themselves pretty strongly to 7% growth, and I think they'll do whatever they have to achieve it.
All right. Thank you so much for coming in today, Professor.
Thank you.
Like in most places around the world, running a business in Korea, whatever form it may be, is all about cutthroat competition. But some business owners are turning away from that idea and employing different models of growth. Not only that, they're seeing good results from it. Our Lee Ji-young has more.
It's hard to believe that this bakery, which now owns 8 franchise stores with a combined annual sales of over $8 million, once started off as a mom-and-pop store 23 years ago. Besides the high quality of its foods, the bakery says another big reason for its success is the idea of coexistence. In other words, making sure it doesn't set up shops in areas that already have smaller bakeries.
When it comes to baking, there's only so much big companies can do with their capital. It's more about experience and techniques that we've accumulated.
This franchise cafe also runs its business with the same principles at heart. Rather than shaving off a percentage of sales from its franchise outlets on top of accepting royalties, it asks only for a one-time fee, mostly to cover costs.
We wanted to sell coffee at a cheap price, so that's what we strive to pass on to others. This ended up receiving a lot of positive feedback.
Figures from the National Tax Service indicate that from 2004 to 2013, 84 out of 100 businesses started by individuals ended up closing shop. Loans for private business owners have surged by roughly $17 billion so far this year, making it the largest annual increase on record. But monetary support alone is not enough.
With large companies expanding into the territories of small businesses, we need more regulations to protect and secure growth of small-sized operations.
Experts say setting the stage for fair competition among all business, big or small, should have greater priority to ensure mutual growth during challenging times. Lee Ji-young, Business Daily.
Korea's housing market is still going strong well into the fourth quarter and the fall moving season. And against past trends, the so-called right to new home units are emerging as desirable properties to nab. Our Eunice Kim explains.
The right to a new home is extended to existing residents of an apartment or housing unit pegged for a facelift or a much-needed redevelopment. That right can be sold on the open market, but was a trade mostly inactive in the past due to built-in factors of unpredictability and added costs incurred from construction or operation. But this year, it's a very different picture, thanks to the triad of lump-sum jeonse deposit wars, a boom in pre-sale housing, and low interest rates. The number of such transactions in the greater Seoul metropolitan area, home to nearly half of Korea's population of 50 million, posted a 17% jump from last year, doubling since 2013. In tandem with rising demand, prices are also heading north and exceeding those of the pre-sale units. For a right-to-new home unit in the Gangnam district of Daechidong, prices have swelled by $100,000 or more compared to a year earlier. North of Hangang River in Wangsimri, October prices had skipped by more than $50,000 in just 6 months. It's a trend being ascribed to the fact that many rebuilding projects occupy land in the affluent and desirable Gangnam neighborhoods, home to some of Seoul's best schools and an area unlikely to build new properties. As successful bidders enjoy first dibs on the location of their unit in the new high-rise, market followers anticipate prices could go up even more after pre-sale lots are sold on the properties. Eunice Kim, Business Daily.
That'll do it for me. Thanks for watching, and we'll be back tomorrow at the same time, same place. Until then, goodbye.